Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as usual. Guys, we're going to do something a little different in this podcast. We're going to take a little more time and we're going to show you guys something very awesome. We're going to show you how you can make spectacular yield returns in the stock market. Bob's going to show you in a series of slides how to do just that. You're not going to want to miss this. Let's dive in.
Trade Genius.
Hey, thanks for the intro, Phil. What I want to talk about today, guys, is something that I think is going to be a game changer. Regulations last year changed, allowing retail to participate in a new derivatives type product that are really called high dividend paying ETFs. Let me explain. The strategy behind this company called YieldMax. So you can go to yieldmax.com and you can see what they're doing. You can read all the prospectuses if you will. But the bottom line here is their strategy is to use the options markets to create high current dividend paying income. And their second strategy then is to obviously mimic the underlying stock that's creating the ETF for the dividend so that their price will follow over time. But the number one thing is to provide super high income paid monthly. And these guys invest in well-known successful companies, Apple, Amazon, Nvidia, ExxonMobil, Disney, Square, Snowflake, et cetera, AMD, so that you're not dealing with penny stocks. You're dealing with brand names. And the thing that they have in common is they have a lot of price movement, which creates option income for you to take advantage of and get distributed to you every month. And this strategy is called a synthetic covered call strategy. And so in it, what they do is they sell a call option against a straddle. It's called a straddle, where they buy a call and sell a put. And that's what they use to pin the ETF. And then they sell calls against it weekly to generate the income. And so it's a really simple strategy. If price stays in a certain range over the course of the month, you collect all your premium, your price levels stay essentially the same, and you distribute and you go on to the next month. If price goes up a little bit, the price of the underlying goes up, the ETF goes up. If the price goes down of the ETF of the underlying, the ETF goes down as well. So really what they're trying to do here is saying, look, over time, if these companies survive 2 or 3 years, which you expect them to do, they're going to be generating income between 30 and 130% annually, which is just mind-boggling. And this one here was using Apple as it, for instance. Here's the June performance of these ETFs. Coney is the ETF for Coinbase, 97% annualized yield payout in June. The July ones just came out. They come out every month at the beginning of each month. Nvidia, it was NVDY, 100.97%. Misty, which is part of MicroStrategies, 133%. Down to looking at ExxonMobil, which is, XOMO, paying a 20% yield. These things are simply amazing. You can't generate these yields on your own. You don't have the margin, you don't have the time, you don't have the bandwidth, you don't have the information, and let these guys that professionally manage these ETFs do it for you. The trick is to do it correctly, and that's where we come in. And we have 3 strategies that we look at. One is we're doing right now what we call a bullish sector rotation. Okay. So these funds have a lot of product that is associated with Bitcoin related activities. Coinbase, MicroStrategy, Square owns, Bitcoin in its portfolio. Bybit is a derivative of the BITO ETF. And our view is that there's still a big move ahead in Bitcoin in the near term. We're talking now 6 months out. And so we want to be involved in those ETFs that are going to generate the income. And if you notice from the last chart, these are generating, past 12 months between 90 and 130% distribution. That means getting almost your entire investment back in the first year. And it's like a rental property. You paid off the house. You're just collecting premium going forward as long as you own those ETFs. The next area that we spending time on is what we call the bullish neutral future price level strategy. And this is where we use our traditional algorithms such as TradeForce and the advanced indicator package, which creates the worm and the ranger, those algorithms of ours. And this is where you enter and you hold for long swing trades and collect superior dividends. And, we're doing it with Tesla, which is Tesla, ExxonMobil, which is ExxonMobil, Amazon, AMZY, and VDY is NVIDIA. And then we're starting to see new ones coming into the summertime, which our clients are getting exposed to. We're putting those out as trades right now. And the third area is what we call the market neutral strategy, is the one I'm most excited about, where you could be both long and short an ETF that tracks Tesla. And our strategy is to bias it by direction to be able to create an environment where we're collecting yields right now in the 50% range, at the same time keeping the relative value of the underlying ETF prices pretty neutral. And on a going forward basis, this would be the best strategy for everybody to employ over time, because you're getting the highest amount of yield with the least amount of risk, and you're letting time basically generate wealth for you. And you can drip these, or you can take the cash. It's your choice. And just to give you some examples here, what we do is essentially the bullish neutral strategy is that we use our ranger on a weekly basis to say, hey, if price is staying above one of our range levels, and remember, our ranger works off of Fibonacci retracements, and this is what bands these option premiums as well. So they're looking to buy calls and sell calls. They make the most money if the price action stays within these ranges. Our range bands help you determine that visually, whether or not you want to participate in these particular instruments on this second strategy. And for example, if it stays above my red line here, the monthly dividend, just keep collecting it. And I've been doing ExxonMobil for months, and it doesn't really matter to me what the underlying price is, as long as it doesn't change the range of my range strategy algorithm. I'm just going to keep collecting and ignore it. And over time, you're building up wealth that you can either be reinvesting or taking as cash. The next one is the market neutral strategy. It's a little bit more involved, but not much. Is where you take a position where you're 70% long, 30% short, 50-50, 30% long, 70% short. Again, we use the range algorithm. We use the worm or the TradeForce algorithm to determine how bullish or bearish or neutral we are. And our goal here is to then be able to communicate those to our clients, so you don't have to do all the thinking. You don't have to read this, interpret the visuals that you see here. And, we'll do that hard work for you. And our first test with this is with Tesla, with Tesla and Crash. It's going well for the first month, and these things just came out. And there's 5 more coming, Phil, over the next 30 to 90 days. There'll be a total of 6 of these potential pairs. And we'll participate in all of those. And like I said, the goal here is to capture. If I said to you, Phil, you can make between 30 and 50% annually, and your risk in your underlying price portfolio could be 10 or 15% tops, you'd be all over that. And we're going to be able to bring those type of trades to you at Trade Genius, and we want you to be able to take advantage of them. This is absolutely a game changer, guys. You need to check it out. And like I said, if you're seeking higher yields, low price volatility, higher returns on investments, and you don't want to be sitting at your screen all day, look us up. Check us out. TradeLikeAGenius.com, TradeGenius.co, 1-800-949-1408. You'll be happy that you did so, and you'll be able to probably go through this next bear market with a lot less anxiety. Thanks for listening. Thanks, Phil.
Trade Genius.